Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar. Today's date is May 24th, 2024. Let's get started. Well, it's Friday. We're heading into a three-day weekend, and it's always good to take a look at what happened this week. And if we take a look at the Aussie versus US dollar, in trading last week, we moved higher, and to the highest level going back to, well, back here, which is mid-December, I guess. And the price rotated to the downside and rotated higher. And this week on Monday, the market moved a little bit to the upside, but could not get above the high price from last week. We started a rotation to the downside. Now, there are a couple of swing areas in between, including this area between 1.0676 and 1.0689. The price initially moved below that level and came down to another swing area right here between 0.6635 to 43. So things were working along pretty well technically. The market bounce came up into the higher of the swing area and then rotated to the downside. And you can see the price action since then with midweek going down to test the rising 200 bar moving average on the 4-hour chart, moving back up near and a little bit above this swing area before rotating to the downside. Now the low price in trading here today did come down sort of to a random area. I wouldn't necessarily say this is a level that I would necessarily target. I would probably look more toward this level right through here around the 0.65852, but the price did bounce ahead of that level, and we have since moved back up to test the 100 bar moving average on the 4-hour chart. That level comes in at 0.66251, and we seem to be finding at least some stall against that level ahead of this swing level area through here. So if the sellers can lean against this level, it would say to me that they want to stay away from this level. The sellers are more in control. This is just a correction into the resistance above, and we would expect further downside potential going forward with perhaps this low at 0.6585. Followed by the 38.2% retracement. Not far away from that at 79 is the next key target for the pair. As you know, I like to see moves correct more than 38.2% retracement. So getting below that level would be significant to define whether this is just a plain vanilla correction in what has been more of an upward swing, at least over the last month or so of trading. Or is it something more, in which case we'll start to look toward the 100-day moving average and the 200 bar moving average on the 4-hour chart. That's at this area now, down at the 0.6560 area. Note also that at the 38.2% retracement, we do have this low price from last week. From last week, which stalled the fall. We also have a high price through here that stalled near that level as well. So it's this level is going to be key, 38.2% retracement, not only going forward into the new trading week. So that's my look at the Aussie versus US dollar, watching the 200 bar moving average on the 4-hour chart, watching this swing area to see if the sellers come in against that level. And on the downside, we'll be looking toward that 38.2% retracement. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.